Hi, this is John Persinos, Editorial Director of Investing Daily, with a video update for Monday, August 10. Well, it's a perplexing situation, isn't it? The stock market continues to rally despite a severe economic recession. The math just doesn't add up. In the meantime, though, this unloved but certainly welcome rally rolls on. Stocks last week continue to enjoy bullish momentum as small caps rose to add breadth to the post-crash rally. Technology stocks retain their strength, boosted by second quarter earnings results that surprised on the upside. The NASDAQ composite reached all-time highs yet again. Big tech stocks continue to be the major winners during this pandemic. They're poised to be even bigger winners in the post-COVID world as consumers increasingly clamor for their digital products and services. The following table tells the story of last week's stock market gains. Lifting investor spirits are better than expected manufacturing data from the US, Europe, and Asia, indicating that the global economy is recovering. But that recovery is painfully slow, and we have a long way to go until we reach pre-pandemic levels of production and employment. Last Friday's jobs report from the Bureau of Labor Statistics showed that the unemployment rate dropped from 11.1% in June to 10.2% in July, and 1.8 million more people were employed in July than in June. But for the most part, these aren't new jobs. Nearly all of the people returning to work were on temporary layoffs. After 3 consecutive months of falling unemployment, we still find ourselves at levels of unemployment that resemble the depths of the Great Recession. Let's not forget that. Take a look at my second chart. Unemployment continues to fall, but from stratospheric heights. The coronavirus-era unemployment rate peaked at 14.7% in April, which actually was closer to 20% due to what the Bureau of Labor Statistics called a misclassification error. The economic rebound continues, yes, but it's moving at a snail's pace. What's more, the latest jobs reading is only a snapshot, taken before several states were compelled to reverse reopenings due to a resurgence of the coronavirus. It's also worth noting that the jobs market still hasn't bridged the gap with pre-pandemic levels. Take a look at my third chart. The economic recovery already appears to be slowing. The improvement in unemployment numbers from June to July was significantly less than the one from May to June. A serious headwind is the inability of the White House and Congress to reach an agreement on another stimulus package. Fiscal stimulus talks broke down amid bitter acrimony last week, and our nation's leaders Friday, they simply left town. Fact is, central banks around the world are propping up the financial markets while the global economy sputters. A decline in real wealth, increase in corporate and private debt, and plunging household income are the economic realities. Policymakers are eager to continue inflating the asset bubble until the November election is over. What awaits in the fourth quarter of 2020 could be ugly indeed. The good news is a great economic revival probably awaits us when the pandemic is over. I truly believe that. But the key is that we need to first get the coronavirus under control. Regardless, at the bottom of the article that accompanies this video, I steer you toward an investment opportunity that's poised to exploit the conditions I've just described. Well, that's it for now. If you have any questions or comments, drop me a line at mailbag@investingdaily.com. In the meantime, here's to your wealth and, more importantly, here's to your health.